There are some companies that are just everywhere, but kinda in the background. DreamFolks is one of them. If you travel, I guarantee you've probably used their services maybe without even realizing it. They're the ones who get you into that airport lounge with your credit card, but lately their financial results have been telling a very confusing story. And that's the mystery we're gonna unpack right now.
All right, let's dive right into the numbers because this is where it gets interesting. The company's latest quarterly report seems to be sending two completely different signals.
So, on one side of the coin, you have the hard numbers, and at first glance, they don't look great. Revenue is down by over 35% from the same time last year. That's a pretty big drop. But then you listen to what the chairperson is saying, and she's talking about a phase of strategic transformation that has strengthened our foundation. So, what's the deal? And that really raises the key question here, doesn't it? Is DreamFolks in some kind of trouble, or are they just playing the long game, making a move that the headline numbers haven't caught up to yet? To really get what's happening, first we need to understand what DreamFolks actually does, because believe me, it is a lot more than you probably think. When you hear the name DreamFolks, this is probably the image that pops into your head, right? A nice, comfy airport lounge, a little oasis away from all the chaos of the main terminal. This has been their bread and butter. It's what they're known for. But here's the kicker, and this is crucial to their whole strategy. Their network is already so much bigger than just airports. We're talking about lounges at railway stations, places to eat on the highway, golf lessons, social clubs, airport transfers, even spa and wellness services. They want to be a part of your entire travel journey from door to door. Okay, so now let's look at the big strategic chess moves the company is making. This is where we start to find the real answers behind those confusing numbers from the beginning. The absolute centerpiece of this whole transformation is their recent acquisition of a company called 1011 Hospitality. The chairperson herself calls it a significant milestone. So what makes this company so important? Well, by buying 1011 Hospitality, DreamFolks is making a huge strategic shift. They're getting directly into managing and operating railway lounges themselves. This means they're not just the facilitator anymore, they're becoming the operator. Now, the strategy behind this is a classic business move. It's called backward integration. Think about it. Before, they were completely dependent on other companies to run the lounges. So what happens if a partner suddenly decides to raise prices? Or what if the service quality starts to slip? DreamFolks' reputation is the one on the line. By owning the lounges themselves, they can control the quality, improve efficiency, and cut out that risk. It's about taking control of their own destiny. And this isn't just about physical places. They're also pushing really hard on the digital front. They're launching a new membership club, partnering up for smoother travel payments, and even working on a premium digital wallet to get all these perks to a much wider audience. So the billion-dollar question is, why now? Why make all these big, expensive bets right at a time when revenue is taking a temporary hit? The answer is actually pretty simple. It's all about timing. DreamFolks sees this massive wave of growth coming in India's travel world, and they're paddling hard to position themselves to catch it perfectly. First off, just look at domestic air travel in India. We're talking about more than 40 million passengers every single quarter. That is a huge, consistent demand for flying, and every single one of those travelers is a potential customer for DreamFolks. Second, let's talk about the key that unlocks all their services, the credit card. The number of credit cards out there has climbed to over 113 million. That's a massive and steadily growing pool of people who can get access to what they offer. And it's not just about how many cards there are. People are spending more on them too. The average spend per card is now over 53,000 rupees. Why does that matter? Well, because higher spending is often what gets you those premium perks, like the very lounge access that DreamFolks provides. And this growth engine isn't just in India's airports, no way. The government is pouring money into modernizing the railways, global passenger traffic is projected to just explode, and the entire airport lounge market around the world is growing at over 14% a year. All of these trends are like powerful winds at their back, pushing their strategy forward. So let's put all the pieces together. How does this all add up? What's the big takeaway here? Here's the bottom line. That dip in revenue we saw at the very beginning, that wasn't a sign of failure, not at all. It was the price of admission. It was an investment. DreamFolks is basically trading a little bit of short-term pain for a much stronger, more diverse, and ultimately more profitable position in the future of travel. And that leaves us with a really fascinating question to think about. I mean, with one single company connecting the dots between airport lounges, railway stations, highway dining, and airport transfers, all tied together digitally, what would that completely seamless travel journey actually feel like? It seems we're about to find out.